A hospital bill can leave you bankrupt. Here's how to choose the right health insurance. It is around 11:30 at night. A family is standing silently at the billing desk of a private hospital. The operation is over, the doctors have done their job, the patient is now out of danger, but the real fear has only just begun. The bill amount is glowing on the screen, and for the first time, the family understands that illness does not attack only the body, it strikes directly at savings, plans, and the future too. The greatest uneasiness comes when someone feels, we already have insurance, so what is there to worry about? And then that very insurance falls short at the most difficult moment. This is where the curiosity begins. How exactly should the right health insurance be chosen so that even after recovery, the hospital bill does not destroy life? A story like that of Vaibhav Pandey from Noida is not a lonely one today. Change the city, change the name, change the illness, but the pain will remain the same. While buying a policy, people look only at the premium, the brochure, or simply trust one line from the agent. A 5 lakh cover is enough. But after reaching the hospital, they realize that cover and actual protection are not the same thing. Many times there is a room rent limit. Many times co-payment appears. Many times the waiting period blocks the way. And many times a sub-limit is hidden in the policy that changes the whole picture at claim time. It is at this point that many middle-class families break down financially. The cost of treatment is rising rapidly today. According to Aon's 2026 Global Medical Trend Rates report, employer medical plan costs in India were projected to rise by 11% in 2026. While the projection for 2025 was 13%. That means the pressure of medical costs is still very high, even if the growth has moderated a little. In such an environment, a small cover taken many years ago, especially in big cities, can fall short very quickly. That is why now it is not enough to simply say, we have a policy. The question now is what kind of policy it is. Many insurers offer plans in which, along with the base cover, options like optional benefits, add-ons, restore features, top-up, or super top-up are available. In the market, people often call this customized health insurance. Its direct meaning is that instead of fitting every family into the same template, the cover should be chosen according to its need. The need of a young couple will be different, the need of a diabetic senior citizen will be different, and that of a family with small children will be different. That is why health insurance should now be understood not like the ready-made size of clothes, but like a measured fit. If your age is low, your lifestyle is active, and your family history is not heavy, then your planning will be different. If there is a history of BP, diabetes, thyroid, heart disease, or cancer in the house, then your risk calculation should be different. If you live in a metro city, then room category, hospital charges, and specialist fee can all be higher than in a non-metro. So while choosing a policy, looking only at the sum insured is a very incomplete decision. The real understanding lies in understanding the policy wording, exclusions, sublimits, waiting period, and claim conditions. Many people think that cashless means not a single rupee will have to be paid in the hospital. This is not always true. Under RBI's health insurance regulations, insurers are required to maintain an adequate number of network hospitals and to make the list of network providers available to insured persons. This means that choosing the network hospital is extremely important. If your preferred or nearby good hospital is not in the network at all, then in an emergency, the practical benefit of the cashless facility may reduce. That is why, before taking a policy, checking the insurer's hospital network list is just as necessary as looking at the premium. Now, if we talk about the most dangerous trap, then room rent limit comes right at the top. Many policyholders think room rent is only the rent of the room. But in many policy wordings, room rent and associated medical expenses are linked with each other. Some policies clearly state that if the insured person takes a room above the defined room category or rent limit, then a situation like proportionate deduction or co-payment can affect the claim amount. In other words, the mistake happened only in choosing the room, but the deduction is felt across the entire bill. This is exactly the point where the person taking the policy should pause and read before signing. The second big term is co-payment. Its direct meaning is that some percentage of the admissible claim amount will have to be paid from your own pocket. In IRDAI-approved policy wordings, the definition of co-payment is given in exactly this way. It sounds like a small clause, but at claim time, this very clause can create a big difference in a bill worth lakhs. Suppose the bill is large and the copay is 10 or 20%, then even after everything else is right, there can still be a heavy hit on your pocket. So while taking a policy, it is necessary to ask whether copay is compulsory or optional, after what age it applies, and whether there is a different rule for specific cities, hospitals, or treatments. The third thing is the waiting period. Many people assume the very next month after taking a policy that now every illness will be covered. Whereas the reality is that a waiting period may apply to pre-existing disease, specified diseases, and some procedures. If the policy keeps getting renewed, continuity benefit remains in place, and in many wordings, a grace period of up to 30 days is mentioned, but if there is a break, the waiting benefits can be affected. That is why, instead of taking a policy after illness comes, it is wiser to take the policy while still healthy. The biggest benefit of insurance goes to the one who buys it before the emergency, not during the emergency. Now the question comes, how much cover should one take? There is no universal answer to this question, but there is certainly one practical rule. If you live in a big city, have a family, prefer private hospitals, and also want to take future medical inflation into account, then it is not wise to sit comfortably with a very small cover. Many families now add a super top-up along with the base policy, so that extra protection is available in case of major hospitalization. On the official product pages of insurers, top-up and super top-up are explained as extra protection above the base cover. The benefit of this is that protection can increase while the premium can be kept manageable to some extent. Along with this, it is also necessary to understand restoration benefit. Many insurers provide restoration or restore benefit, under which after the sum insured is exhausted, the cover can become available again according to the policy terms. But the most important thing here is that restoration does not work the same way in every policy. In some places, it applies only to unrelated illness. In some, the condition for the same illness is different, and in some, the trigger happens only after full exhaustion, while in others, even on partial utilization. So it is not enough to feel happy just by seeing restore available in the brochure. You will have to understand when the restore will trigger, how many times it will happen, and on which claims it will not apply. If you are a young couple and are thinking about family planning in the next few years, then maternity cover and newborn related benefits should be understood early because waiting periods on these are also very common. If you want to add parents to the cover, then features like senior citizen plans, copay clauses, disease-wise restrictions, and domiciliary treatment should be read carefully. If someone in your family has an old illness, then it is extremely important to declare it honestly before taking the policy. Trying to save premium by hiding disclosure can later turn into a claim dispute. The most basic rule of health insurance is this: telling the truth in the proposal form always turns out cheaper. Lies turn out very expensive. Many people, in the effort to keep the premium low, take such a policy in which there is no OPD cover, preventive checkup is limited, there is no clarity on daycare procedures, the ambulance limit is small, or modern treatment coverage is weak. It is not necessary that every person needs every add-on, but it is necessary that the feature which is important for your family is the one you choose. This is where customization is understood. A young bachelor may perhaps find accident cover more meaningful than OPD, but a family with small children may find doctor visits, daycare, and emergency access more important. The right policy is the one that matches the real needs of your life, not just the sales pitch. And one thing people often forget is the difference between deductible and sublimit. Some extra covers look cheap because they have a deductible, meaning up to a certain threshold, the expense has to be borne first by you or by the base policy. Some plans may also have treatment-specific sublimits. In simple language, the real benefit does not necessarily become as large as the headline cover amount appears to be. So while buying insurance, do not look only at the front page. Also look at the benefit table and the exclusion section. The point that the agent quickly moves past is often the same point that hurts the most at claim time. So what questions must definitely be asked before taking a policy? First, ask what the room rent limit is and what effect taking a room above that will have on the claim. Then ask whether there is a co-payment or not, and if there is, when it will apply. Also ask how the restoration benefit works and whether it applies to the same illness or not. How long is the waiting period? When will pre-existing diseases be covered? What is the separate rule for listed procedures? Are daycare treatments included or not? Is modern treatment covered or not? And which good hospitals in your city are in the network? Along with that, also understand how the no-claim bonus increases, how premium may change across age bands, and what effect a renewal break can have on continuity. Choosing the right health insurance does not mean buying the most expensive policy. It means buying such a policy that gives confidence at the time of illness, not confusion. A person lying on a hospital bed cannot read wording, and the family at that time cannot understand legal language. That is why the policy has to be read today, not after the bill comes. If you choose the wrong plan just to save premium, then that small saving can later turn into a very big loss. But if you have chosen the right cover, the right insurer, the right hospital network, and the right clauses with careful thought, then insurance will no longer remain just a piece of paper. It will truly become a financial shield. In the end, remember this: no one knows when illness will come, but when to make financial preparation is something we decide ourselves. The greatest strength of a middle-class family is not its income, but its planning. And health insurance is that part of the planning which people often postpone until it becomes too late. A hospital bill can shake someone's savings, gold, emergency fund, and future goals all at once. So, while taking a policy, keep only one question in mind. Will this plan bear the cost of illness, or will it leave me alone in difficult times? That very question will take you to the right insurance, and perhaps one day it may also save your family from breaking down at that billing counter.